here to talk to us about their numbers. Ashish, in terms of order inflow, are there green shoots visible? What are the conversations you're having? Because not particularly seeing, if I can call it, animal spirits come back where ordering is concerned. So what are you seeing on ground? Give us a sense of that first.
Good morning and happy to be here.
Very good morning.
You'll see from our numbers, we showed a reasonable uptick on orders, and we've been saying that for some time that this year as a whole, we expect to be a substantial rise over last year. This is driven by two things. First, most of last year, as we were saying, there were certain kinds of orders, large government contracts with civil and construction that we said we were saying no to. So last year in particular was quite difficult for us on the orders front as we were looking to change our focus and move into areas that we thought would be profitable and accretive. So that impact is starting to show this year, and we were bullish. The second thing that has helped is international orders are particularly strong. And this quarter, now third quarter in a row, but even more so than in previous quarters, we have shown success on multiple aspects of international. We have been able to continue to win in oil and gas and refining in global projects. But this last quarter, we had a win which in our view was strategic for data centers in North America as well.
Interesting, Ashish. You spoke about data centers. What is the kind of opportunity that you see there, given the fact that now we have two big mega trade pacts which are there, one with the European Union and the other one with the US?
So both of these should help. The sector itself is evolving very quickly. Some of our solutions lend themselves well to powering data centers and ultimately driving efficiency in data centers from very creative cooling and heating solutions. So that's our angle in. The opportunity size is potentially large, but it's a space where which is constantly changing. Specifications changing, players changing, local dynamics also, but very, very interesting and one that we are spending quite a bit of effort in becoming successful at.
How are you looking at innovation in this part? Because the technology of cooling is changing dramatically for data centers and it's changing rapidly there. And there's opportunity not only overseas, but in India as well for data centers.
Sure. And Thermax has some cooling solutions which are very different from the run-of-the-mill cooling solutions that are typically driven by cooling from electricity. Thermax has a series of solutions that help drive efficiency, lower water usage, lower energy usage, and one in particular which is called vapor absorption chillers. This is where we take waste heat which comes from various different sources and then we convert that to cooling. So as you know, data centers have got a lot of heat being generated from chips and various different usage of CPUs and GPUs. And our ability to take some of that waste heat and convert it into things that are useful is where we stand apart and where we can do interesting things. It's not as easy as I'm making it sound. It takes a long effort and some of it is R&D, which is what we have been successful at.
Okay. And Ashish, hi, morning. You expect Q4 to be better than Q3. You're expecting an improvement in volumes and henceforth an improvement in margins too. Now with margins already around that 9.7 mark for you, what would be a good expectation to have in terms of where the margins could head? Anything above that 10% plus mark?
We don't forecast. Sure. And I would say Q3 on margins was okay, not too good, in my opinion. The margins look good because we had two one-time effects. One, which is a resolution in a long-term case that we had, which was a favorable ruling in our favor. So there was some positive impact. The second was the negative impact from some of the labor laws that got announced, and both of these were one-time impacts, the net of which was positive. So that boosted our numbers. What I look for from Thermax is consistent revenues, and even in this quarter, our revenue relative to our backlog was okay. And I've been saying for some time that based on the monsoons and how active the monsoons were, for many of our customers, execution was challenged and that continued right into October. So even in Q3, some of our revenue numbers were impacted based on how customer sites were operating, which now in Q4 is getting cleared. As the revenue improves and we cross 3,000 crores in revenues, that impact will show up on our profitability as well. And I'm really looking forward to a good Q4, both in terms of revenues and profitability, and to continue the orders increase trend that we have been on and continue to build a good backlog.
Ashish, give us a sense on the chemical side of things. What's the key drag there, and could that, and when can that turn around? Give us that sense. Would Q4 be that quarter?
So chemicals, I look for two things. One is gross margins and how those gross margins are doing. The gross margins are still very healthy and good. So that is the positive. The negative is the capex that we have added and the lack of volume that we have had is giving a drag. So this will take a little longer to fix. You will see the improvement in Q4 itself. The volumes are starting to go up. But to get back to that 17% kind of profitability on a PBT side, which this business has given for multiple years, that will take us slightly longer. But the improvement you will start to see from Q4 itself because our volumes are starting to go up.
You see the domestic market pipeline for orders into as you go into 2026. Is there a good trend of orders coming from some of the new sectors like power and all? Because we've seen some kind of activity with respect to again capex coming back to thermal and other sector.
So there are new sectors. Power is one, data centers is another, refining, petrochemical, pharma coming back in certain cases. One drag that has been there for us on the domestic side is the whole ethanol sector, which for a couple of years gave us fair bit of orders. The whole ethanol market has softened quite substantially. So net, I would say I'm positive, but I wouldn't mind seeing a bigger takeoff on private capex. Yeah, I do believe the market environment is right, but we would like to see more private capex take off. We have been doing well based on international orders. Domestic, I would expect next year would be better than this year based on some of the fundamentals.
Okay, Ashish, and lastly, before we let you go, talk to us about your industrial product segments. We have seen some weakness in Q2. Some recovery has been seen in Q3. What's the outlook here?
Looks to be decent. On the revenue side, it is largely driven by making sure that that our customers are doing well in terms of how they execute their projects. No major red flags. As I said, some of those ethanol sector impact was on both the power, which is where we do heating solutions, and the water portion for ethanol. Nothing that impacts us on the revenue side because these are orders which we did not take, understanding how the commercial situation and the credit situation was for the customers. This has impacted us more on the orders front. But as I look at our backlog is up quite substantially. It's a good backlog in my opinion. And as we deliver that backlog, we'll get profitability as well.
Okay, Ashish, on that note, we'll have to let you go, but thank you so much for joining us with your time and good luck for the quarters to come. We hope to interact with you in the near future once again. Thanks so much.
Look forward to that. Thank you very much for having me.
Thank you so much, viewers. Okay, on that note, viewers, time to